On this episode of On Subrogation, we're going to be discussing the deposit of a short check for less than the full balance. The legal term of that is accord and satisfaction. I'm Kim Rathbone, your host for this episode. Generally, in subrogation claims, what happens in accord and satisfaction issues is where Party A makes a demand for the full balance. Party B sends in a check, either with restrictive language on it or an explanation that the shorted amount is intended to resolve the entire claim. In that situation, if Party A deposits the check, they are prevented from pursuing the remaining balance left there on the claim. That's because it is determined to be accord and satisfaction by the courts. This is under the Uniform Commercial Code, which most states have adopted. The remedy for depositing a short check, generally speaking, is to return the entire check within a reasonable time period, and most states have determined that 90 days is a reasonable time period, with an explanation that you're not accepting less than the full balance in order to resolve the claim. Now, you're going to want to consider how much of the balance is left when making that determination to return everything. It might not be economical to proceed on the remaining balance, but presuming it is and you want to proceed for whatever reason on the full balance, the way to remedy that situation is return the check with the short payment with the explanation that it is not enough and you expect the balance in full. So why is this the case? The analysis is one of sophistication and intent. So did Party A, the subrogating party, understand that Party B, the paying party, didn't intend to pay more than the amount that they sent? In terms of sophistication level, subrogating parties are generally companies, and those are going to be held to be more sophisticated than individuals. So the assumption is going to be that the company understands within the industry whether something is intended to be a short payment with that explanation or whether it isn't. A subrogation department in particular is going to be held to a particularly high standard because they do understand the insurance industry and likely what that opposing party is trying to do when they're sending a shorted check with an explanation. The other part is the intent. Did Party B make clear that they were intending the shorted payment to be payment in full? And this can be done in an accompanying letter. It can be done with the language on the check. The more clear that those two things, or one or the other, are, the more likely that any court will decide that depositing that check is accord and satisfaction, and Party A is going to be unable to proceed to recover the remaining balance unless they returned that check with the explanation. If there isn't any explanation at all, there's plenty of times where a shorted check is sent in with no accompanying documentation or no explanation that the intent is clear, that it's intended to resolve the entire thing, then it's probably going to be okay under those circumstances to pursue the remaining balance while keeping the money instead of returning it. So what are the arguments that we hear that people want to use to pursue the remaining balance and still keep that money deposited? Well, my company has an automatic deposit process, so I can't really stop them from depositing it. That should allow me to proceed to recover the remaining balance. Nope, that's not going to work because the 90-day reasonable time period to return the check allows a cure of the automatic deposit process. Another one that we hear about regularly is a lockbox. A lockbox is a situation where an insurance company will make an agreement with a bank to do a depositing process on their behalf. And I've heard before that maybe a lockbox process makes it so the accord and satisfaction doesn't apply. That's not true either, unfortunately, because again, that reasonable 90-day time period is the true cure, returning that check, to avoid accord and satisfaction and be able to pursue the remaining amount. Something that you used to be able to do that doesn't work anymore is writing under protest or partial payment and depositing that check and still pursuing the remaining amount. Because again, the 90-day reasonable time period to return that check is what has overtaken as the binding situation for accord and satisfaction. You can no longer just cross out restrictive language either. So it needs to actually be returned and for your communication to be clear that it's not being accepted as the full balance. So what about, hey, we mistakenly deposited the check, we didn't mean to do that? Most of the time that's not going to work either, but there were courts in Florida and Georgia and New York that have allowed mistake to be an argument and to allow the pursuit of the remainder of the balance. So that has worked before, but not very frequently. What about, hey, I didn't understand that they were trying to resolve the balance in full? Most of the time that's not going to work either, but there were some cases in Colorado, Florida, South Dakota, Virginia, and Wisconsin that ruled if it isn't clear that there is a dispute as to the amount owed or that the payment is intended to resolve the entire amount, then the party could pursue the remainder. But the more clear that language is, that the intent is to resolve for the shorter amount, the less likely that you're going to be able to say, hey, I didn't understand what was involved here, and I think I should be able to pursue the balance. Certainly the safest action by any means is to return the check with a full explanation that the full amount is due. Then you can pursue the entire balance that you thought was due in the first place and avoid the accord and satisfaction argument entirely. Thanks for watching this episode of On Subrogation. I'm Kim Rathbone. That's the long and short of it.